Hey, everybody. Good morning, good afternoon. Welcome wherever you're coming from. Thank you for joining. I'm going to go ahead and just give us a basic intro as we're kicking off and as some of you are starting to join in as we go. But what I do want to do is keep things moving because everybody's taking some time out of their day and I don't want to discount that. My name is Eric Schultz. I am one of the partners at Journey Alliance, but today is not about Journey Alliance. It's not about me. It's about the 4 panel members that we have here. And we are going to be exploring what it means to have a fractional CFO, what a fractional CFO can be doing for your business. And these panel members are going to be answering questions as we go. Just some quick guidance for participation. So there's a chat window. Panel members aren't going to be using the chat as we go, but we have Jordan Roberts, and she is managing the content among some other things for Journey Alliance. Excuse me. She's going to go ahead and move any of your comments or questions from the chat window over to this particular event, and I'll go ahead and ask those questions as we go. Mark Pizzulli, my business partner with Journey Alliance, is behind the scenes coordinating things for us as well. Let me go ahead and kick off just by introing the panel members. I'll have them do a light intro on their own. Let me go ahead and kick off first with Lauren. If you can go ahead and just give us a basic introduction to get us started.
Hi, my name is Lauren Colson. I am the CEO of Colson Strategies, and my firm provides everything from bookkeeping controller to fractional CFO services for small to mid-sized companies.
Thanks a lot, Lauren. And Rob, how about you?
Yeah, I'm Rob Rodriguez, the COO here at TGG. Similar to Lauren, TGG offers a full suite of accounting services from outsourced accounting to business consulting services.
Yeah, thanks a lot, Rob. And Ashley, how about you?
I'm Ashley Ferguson. Excuse me, sorry. I am a consultant with Now CFO. We provide full service accounting services and anywhere from staff to CFO level across the nation.
Thanks a lot, Ashley. And last but not least, Illyrian, how about you?
Hi, I'm Alir Mehdi. I am the managing partner of Profitability Partners, a fractional CFO firm that offers outsourced accounting, fractional CFO services, as well as capital market services.
Thank you. Thanks a lot. Hey, just some basic guidance for everybody that is in the audience and those of you that are coming into the audience, although you won't be able to hear it. Please go ahead and use the chat window. So I introduced it lightly in the beginning, but we want to get your questions. We want to respond to your comments along the way. So please use the chat. The chat window is not going to be a distraction for any 4 of these panel guests because they're not going to be watching the chat as we go. Jordan Roberts from the Journey Alliance team is going to go ahead and watch the chat window. And if she picks up on a comment or a question that she thinks is relevant for everybody, she's going to go ahead and push that on the screen for us. And then that's going to be my prompt to go ahead and ask a question of the panel. So the best we can get out of this time with these 4 fractional CFOs or representatives of a fractional CFO company is getting real live questions from those of you that are taking the time to actually show up and find out what a fractional CFO might be able to do for your business. We did ask questions, though, of a lot of you before joining this event over the last few days, and we asked what you wanted to hear about and what you wanted to know. So we've gone ahead and we've compiled some of those questions. So we have some in our back pocket that we're going to go ahead and ask as we go, as we're gathering questions from everybody that's here at the event. Before I do that, though, just want to go ahead and do a little bit more housekeeping. So we're going to keep everybody in the audience muted. So if you've joined and you were hoping for the opportunity to verbally ask a question, I apologize, but go ahead and drop it into the chat window if your questions don't get answered. So as we go through this conversation, you have a question or you make a comment and it's not something that we put up on the screen, all is not lost. We've asked each one of these panel members, once this event is done, sometime between now and early next week, if they can go back through the trail of the chat, and if you've asked a question and maybe it wasn't fully answered in this event, or maybe they have a different answer after they've given it some thought, they'll go back through the trail of comments that are here on the event over the next several days, and they can go ahead and just drop a response back into you on that. So again, if you ask a question, it doesn't get answered, we're going to do our best, each one of these panel members, to go back through and answer the questions. Last thing, just from a general formatting standpoint. So we're going to have questions. They're going to go up on the screen. I'm going to do my best to keep up with those or pay attention to those. And then I'm going to ask different panel members what their thoughts are, how they would respond to those questions. Sometimes I may ask one panel member, sometimes I may ask two. There might be some questions that it's more appropriate for me to ask all panel members, but I'll do my best to get as much information as possible so that you coming into this can get a feel for what it would be like to have a fractional CFO. Let's go ahead and jump in. First question that I have that I'm going to go ahead and ask just to get us started. And Lauren, if you could go ahead and answer this question for me, is going to be jumping right in is what's the difference between a fractional CFO, kind of the classic or standard bookkeeper, or maybe even just that standard CPA firm. But I know myself early on didn't understand the difference, and I'm assuming there's a lot of people that have the same question.
Yeah, this is a great one. So I'm going to start with the bookkeeper. They're really the lifeline of the business from the financial day-to-day. So they are the ones that are recording all your transactions, paying your bills, sending invoices, keeping the day-to-day running. And it's so important that they are producing timely and accurate financials, because that is what the fractional CFO needs to really sit in their seat and do their job. So while the bookkeeper is focused on historical and day-to-day, the fractional CFO is focused on the go-forward strategy, looking at what's happened historically, trends, KPIs, and using that to help you, the business owner, the CEO, founder, plan and achieve those goals that you have prepared going forward. So those are the big kind of divides there. Generally, the CPA firm is used to file taxes. They will also do bookkeeping there as well. But in my firm, for example, we don't do taxes. So we partner with different CPA firms to fill the tax side of things. So everyone kind of has their own specialty there.
Understood. No, I appreciate that. So it sounds like bookkeeping is a matter of what's already happened, and a fractional CFO is on the planning and the forward-looking side. Is that a good summary?
Exactly. And it's really crucial to have both pieces, because with the fractional CFO cannot help you achieve those goals if the data that they're looking at is not accurate. It's a garbage in, garbage out kind of scenario. So they really need that partnership between the two roles.
Understood. Hey, Rob, same question, just as you're listening to Lauren as she's answering that. Is there anything that you would want to add to that or say differently if someone in the audience is trying to size up what the heck a difference is between a fractional CFO, a bookkeeper, and just that classic CPA firm?
No, I think she's spot on. You know, the staff accountant should really be focusing on that transactional day-to-day AP, AR, kind of the data entry side of the equation. For us, the CFO is really around the strategic goals. And when you're looking at those goals, usually it's around profitability or growth. So aligning that strategy with what we're doing on a day-to-day basis. And then obviously the CPA focusing on taxes and that, because similar to Ashley, our firm does not do, or Lauren, our firm does not do tax. So our CFO is really focusing on that strategic company goals and aligning that together.
Yeah. So it sounds like a pattern there. Lauren from you, Rob from you, where both your firms don't handle taxes, and you see that as being that outside CPA firm that focuses in that area. So question then, Ashley, for you, anything as you're kind of hearing this from an introductory question standpoint, anything that you would say differently or that you all handle slightly differently?
Well, I like to describe it as taking a whole health approach to your business. Instead of just assurance services or tax prep, we can go in there and be the liaison with your CPA firm. Kind of take that load off of you during audit prep or tax prep, but it's just a more flexible scope of services.
Got it. So I have this picture in my head based off what you've said and now what the other two have said, where the fractional CFO used the word liaison, but is working closely with that CPA during tax planning time, but with a more flexible scope of services.
Absolutely. Yeah.
Okay. And I'm asking this of all four of you, though, because I think this is a really, really critical area for the audience to understand, especially the business owners that are here for this reason. Illyrian, I'm curious for you, anything as you heard those responses that you might say differently or add to that?
Yeah, I would echo what everyone else on this panel has already said. And then in addition, I would say that a fractional CFO definitely has a much higher level of involvement the way we perceive a company's financials is that they're just surface level. They tell you what's already happened. They don't actually necessarily represent the drivers of the business. And what we've seen is what actually comprises a business is what happens at the ground level. And so we get plugged in, we critically analyze the data, and then we answer the tough questions to help business owners make actionable decisions that optimize their company's value.
Got it. Yeah. So it sounds like with the fractional CFO, there's an amount of analysis that supports decision making. So again, it's kind of that forward looking that everybody else has described.
Correct.
Great. Thanks for that. Hey, Rob, I'm going to go ahead and call you out on this one. David Lennon has asked a question. What are some of the reasons or the value of hiring a fractional CFO other than obvious lower cost of having a full-time CFO?
Yeah, well, I think you nailed the first one is cost. To incur the cost of a full-time CFO, that's a burden on most small to medium-sized businesses. So do you really need the full suite or a full-time CFO? A lot of businesses can't handle that. So when you have that kind of delineation of duties and looking at what's needed, so whether that's kind of the controller at the storyteller level, looking at the benchmarking KPIs, financial forecasting, whether it's the accounting manager that's focusing on the transactional, like the closing the books, GAAP accounting, things of that nature. Most people think, oh, I need to bring a CFO in, which is going to handle my whole suite of accounting, which is not really the truth. You need the right person in the right seat. So that starts reason from a price perspective. But value is really just, again, going back to those strategic goals and aligning that, having another person at the head of the table to have those tough conversations to drive the value that you're ultimately trying to go with your company.
Yeah. So what I'm hearing you say, when you use the word value, if someone were to hire a full-time CFO, they really didn't have full-time CFO work, then chances are that person, and I hate to say this, but for lack of better term, is operating below their pay grade. They're working on work that, while it's valuable for the business, it might not be the highest and best use of their time. And a fractional CFO allows you to really focus that time and energy on those activities that a fractional CFO can do.
Correct.
Okay. Yeah, I appreciate that. Hey, Ashley, same question here for you that David Lennon previously asked and Rob just answered. Anything that you think differently about in terms of the value of hiring a fractional CFO?
Well, one thing I would add is when you're working with a fractional CFO, you're not working with one CFO, you're working with a team. So you get to capitalize on the collective experience of the team versus a single human. I think that there's a lot of value there.
Yeah, tell me more about that. So you've brought up this concept of a team. So does that imply you particularly are working on a team, or is that a particular approach that you take when working with a business?
Well, so now CFO, the Florida market is a team. So if I encounter something new or need to talk through something, I have all these other really intelligent CFOs to talk it over with. And that's important.
Got it. Yeah. So it's interesting. So it sounds like, at least for now CFO and for you, you'll have a fractional CFO working with your business. And if they bump into something or if they have questions, they know that they have the support of that collective team behind the scenes to actually work on something with them.
Right.
Yeah, great. Let's go ahead and jump into this next question. Lauren, I'm going to ask this one of you. If there's garbage going in, can the fractional CFO help right the wrongs via counsel and process?
Yeah, absolutely. I think one of the roles of a fractional CFO is to mentor and provide support for the existing teams on the accounting front. And so while every CFO might not have an in-depth accounting background, with all of the knowledge that they have, they can certainly be able to spot when things are not right and provide guidance and assist the team to help create the timely and accurate financials that they need to be able to use.
Yeah, there's three words I just picked up on that you said that I liked. Use the word mentor, guidance, and assist. And I think, sometimes a business owner has this picture in their head that if they bring this fractional CFO in, that it's going to be almost combative or work against some of those team members that might be working in an accounting capacity or bookkeeping capacity. They might even be legacy team members that have been with the business for a number of years. Can you tell me a little bit more about when you use the word mentor, guidance, and assist, what that looks like when trying to kind of right the wrongs if it is garbage in?
Yeah, and I think for any time you're entering a new business, you really need to take some time to get a holistic view of how the business operates, what the goals are, and how that translates into the accounting and finance processes. And so understanding how that flows is an important step one, and then identifying if there are gaps in information or data that's causing some inconsistencies or items that need corrected, and working with the staff, whether that is pointing them out, guiding them through that, training, various different things to kind of get them up to speed on, hey, you've been doing a great job, but here are some things that we can some value adds that we can do to make sure everything is timely and accurate, and we're getting to the place where we can achieve the goals for the business.
That's great. It sounds like there's a pretty strong leadership component to that then when you have a fractional CFO.
Absolutely. I think not only is the fractional CFO a true partner for the CEO, the business owner, but they really need to fill that leadership role for the existing team. And to piggyback off the other question we were talking about, when you have the expectation that your CFO is going to do everything, it's really diluting where they need to be working at that high level. And so having that team, that existing staff that will support them and they can support as well is crucial.
That's great. Yeah, Illyrian, so same question here with the garbage in. Can a fractional CFO help right the wrongs via counsel and processes? What's your experience in that?
Yeah, I actually like this question because it kind of ties into the last question in that it is one of the many ways a fractional CFO can add value. And I would also go further to say that garbage in, garbage out isn't necessarily binary. When we come into a new customers or new clients' financial statements, we'll see sometimes that data that's being presented is not necessarily of the highest quality or does not give as much financial insight as the business needs in order to make the decisions that it does. And so one of the examples on how we can prevent that is typically by designing a closing process and controls at the end of each month that ensures reconciliation with the financial statements and all the different data sources coming in. So that's the process piece of the question. And then the counsel piece is just pure analytics. So if you're working with a fractional CFO, chances are they're well-versed and experts in finance. And if they're doing just a simple trend analysis and something falls off a cliff or skyrockets without any logic or reason, we can highlight that and sort of roll up our sleeves and get to the bottom of it.
That's good insight and good feedback on that. Before we ask the next question, I'm going to pause for a second. So everybody that's listening right now that has taken time out of their day to learn about what a fractional CFO can do for you or do for your business, I want to just remind everybody or introduce everybody to the chat window that's there for you. I know you can see it, but I want to let you know, please drop your questions or comments in, and Jordan Roberts from the Journey Alliance team, she's going to go ahead and put your questions the best she can here on screen. One thing that you could do in the meantime, just so that we can even see that you're there, because the panel and myself, we have no recognition of actually who's out there other than a few people that have maybe dropped these questions in. Go ahead and drop into the chat window, if you don't mind, the name of your company, where you're based out of, and then something that's going to be really helpful for us to shape this conversation. Even if you don't particularly want to ask a question, what are you hoping to get out of this time right now? So you've taken time out of your day right now to learn about what a fractional CFO can do for you and for your business. What are you hoping to gain from this time? Go ahead and drop that into the chat window, either as a statement or as a question. But go ahead and give us company name, where you're based out of, and what you hope to gain out of the day today. As you're dropping that into the chat window, I'm going to go ahead and move to the next question here. And Rob, let me ask you this question. How closely involved with the team would a fractional CFO be, and would they actually join the leadership team, maybe even the team meeting?
Yeah, so I think in any business scenario, you get out what you put in, and they're only going to be as good as you allow them to be. So the more integrated you have your outsourced for fractional CFO into your team meetings, into leadership development, things of that nature, they're only going to be a better resource. For us, it's about building the relationship, not just with the CEO or business owner, but the entire team, and especially that management team where key decisions are being made. So, when you look at leadership meetings, it's usually around goals and where you're taking the business. So that CFO has to have that insight to be able to be valuable on a day-to-day basis.
Yeah, it's good. And so as you were saying that, made me think, if I'm a business owner, what advice would you give me if I'm trying to balance how much money, frankly, I spend with this fractional CFO versus how closely I engage them with my team and how many things are involved with my leadership team?
Yeah, well, I think it goes back to price when we talk about cost to start. I mean, having a full-time CFO in there, do they have enough work and bandwidth to provide that value on a day-to-day basis? So bringing them in at a fractional component allows them to be valuable when it's needed. So whether that's at a leadership meeting, whether that's managing the team from a leadership perspective, whether that's building out the processes and procedures to ensure the success of the department.
Got it. Yeah. So I guess my snapshot is what you put in is what you get out of it. And so if you really want a fractional CFO or outsourced CFO to feel like part of the team and be actively involved in the business, then the closer you get them, the more you're willing to do that, then probably the better off you're going to be with the outcome.
Correct.
That's great. Yeah. Ashley, same question for you. How closely involved with the team should a fractional CFO or would a fractional CFO be? And would they actually join leadership team meetings?
It depends. It depends. A lot of our work at times is project-based. We'll step in to assist with a merger acquisition or a software conversion. Or maybe you've got a really solid controller. You have a good leadership team. You just, need our finance specific expertise. But there are times where it's critical to be on that team. Every business is different. Every engagement is different. I don't even know if that would be a decision I could make before spending time with any client, or we could make, I should say.
Yeah. So it sounds like there's flexibility even in that, where it's understanding the needs of the business and then based off those needs being as involved as it makes sense.
Right.
Yeah. Lauren, I want to ask you the same question. I think this is a really good question because a lot of business owners are trying to picture what this fractional CFO is going to be doing, how involved with the team. And sometimes that also means they're almost afraid at times of frictions it can create, but they're also want to make sure they get the most benefit. So Lauren, just same question. What would you say?
Yeah. I think an important sometimes realization for business owners is that because they can say, oh, well, that doesn't really deal with finance or accounting, but everything that the business does impacts the finances. So being up to speed and knowing what other departments or other leaders are doing or planning gives the fractional CFO a way to be proactive in, okay, we need to plan for this in cash flow if this is what your team needs, or, oh, that's good to know. We need to integrate that on the accounting team's process to make sure we're capturing that through our controls. And so when you're just working with the CEO in a larger organization, it's hard to get all of that because they may not even know. So to Rob's point, the more you're plugged in, the more value that you can provide. And then I also think that, when you think of outsourcing something, that doesn't mean that you're just giving it to someone else to do. There still needs to be that active participation from the CEO, from the leadership team with the fractional CFO they're partnering with. That's how you're going to get the best results and the best information.
Yeah, it's really good. It makes me think of this concept of, don't know. I don't know what I don't know. And if I don't engage the very person, the fractional CFO, in more versus less meetings, team meetings, whatever they are, I don't even know what this person is going to be able to contribute to the business. And to your point, the right fractional CFO, it sounds like, is going to be listening or hearing things about the financial impact, cash flows, whatever it might be to the business that maybe other people in the room, including the owner, aren't even picking up on.
Yeah, exactly.
That's great. Hey, Illyrian, I'm going to ask you this one. When choosing the fractional CFO for your business, are there CFOs that specialize in specific markets that can be of more benefit to one or the other?
I would start off by prefacing with it depends. But in my experience, industry expertise definitely adds a competitive edge to your financial resource in a number of different ways. In our experience, I've seen having relationships in an industry be utilized to make introductions and create strategic partnerships with our clients that have created new revenue channels and taken the business to the next level. We've also had vendor relationships that are industry specific, where we were able to make introductions and replace certain services that were provided to our clients by vendors at a lower cost or in a more timely manner. And then if you have industry experience and you're thinking, long term, or you have plans to realize a liquidity event, understanding the markets gives you an edge when it comes to valuation and how to position your company when it comes time for that exit.
Yeah. So that's actually, I think it was a really great question. And I appreciate what you shared in that too. I want to go around to everybody on this question because I think this is a question that likely is asked often. Frankly, it's a question that's asked of us of Journey Alliance as well for what we do. So it's something I imagine as a fractional CFO company gets often asked. Let's jump in, Lauren, if you don't mind answering the same question, and then we'll just kind of go around the panel as we answer it.
Yeah, I'm going to take a bit of a different approach to this one because I definitely agree that there's so much value when you have someone that has, strong industry knowledge. But on the flip side, I'm going to talk about the value of someone that may not be super well versed in an industry, because I think that there is a lot of value that someone can bring to a table where this is the way that it's always been done. And we have experience from different industries, and bringing in a different perspective or a different unique idea can be a competitive advantage when working with someone that's not super specific in your industry. They're going to come in with fresh eyes. They're going to say, okay, this is what you've done, but they may bring a little bit more out of the box thinking because they've worked across different industries and they're challenging and trying to see what can we do here that may be hasn't been done, but we can do to spice things up a little bit.
Yeah, that's great. And I think, by the way, I think this is really the value of having 4 panel members, because I believe each of you will have a different perspective on this, even if there are some similarities. Ashley, same question for you. How would you respond to this one?
Well, it's extremely important, and we're really fortunate in that we have, for example, like my specialties are pharmacy and construction, but we have team members who are specialized in insurance, just you name it. And when we have a client in an industry, we make the best effort to match them with a consultant with the proper experience. But what I think is even more important than specific industry experience is just, how do you mesh when you have conversation with a potential client? Do you smile at each other? Are you engaged? Are you interested? I think that that's actually more important.
Yeah, so for you, while industry experience is important, it seems like the fit in terms of do you work well together is more important.
Yeah, I think so. You want to enjoy it.
Yeah, hopefully. Rob, how about you?
Yeah, I mean, I agree with all the panelists, and I think Ashley said it earlier, is kind of having that meeting of the minds behind your single CFO. So for us, we have multitude of different CFOs with a wide range of different backgrounds. We do a CFO town hall once a week where all of our CFOs are bringing their clients' issues, problems to the table, where we can all kind of outside the box think. So you're not just bringing in that one level of expertise. And where Ashley talked about, personality is key. I mean, from culture to how the organization is run, you got to have that fit. Because if you are hiring this independently of a fractional component, you would want to make sure that they're a culture fit, that you enjoy working with them. And then that level of expertise is that next piece that is very valuable to taking the company to where you want to go.
Yeah, it's good. And so picking up on the pattern, I think sometimes maybe when a business owner thinks of this fractional role or thinks of this outsourced role, they may not be considering as much that they should think about them as much as they would bring any other team member on board, from a culture fit and a personality fit as well, because this person truly should become part of the team, even though they're operating in a fractional capacity. Does that sound about right?
Correct.
That's great. Hey, I'm going to jump into this next question here. Lauren, I'm going to go ahead and kick this one off with you. Does a fractional CFO learn and use a company's software, or are they required to prepare the financial documents themselves?
Yes, generally we're going to come in, we're going to learn what systems and software your company uses, and we're going to get familiar and up to speed with those softwares. I'm not sure that I completely understand the second part of the question. But
Yeah, I think by answering the first part, I think you've answered the second part. So if a fractional CFO comes in, they're going to, from your perspective, size up what software is in play and, learn whatever needs to be learned in order to prepare financial documents if they're involved in that.
Absolutely. And then there's also the opportunity to, if you see some inconsistencies or duplicities in different softwares or integrations, to help make a more cohesive kind of operating software flow throughout the organization. But definitely come in and get up to speed and learn and use the softwares that are in place.
That's great. And so you just hit on a concept that we haven't heard yet. So a fractional CFO would potentially be able to size up the technology that's in play, specifically related, I'm guessing, but tell me if I'm wrong, to financial transactions, accounting flow. Is there any other capacity with technology that someone should expect from a fractional CFO?
Yeah, I think on a broader level, I mean, one of the things that we do when we come in to larger organizations are software audits. So understanding what tools are being used, one, making sure that there's a solid process to offboard tools that aren't being used, or employees or team members that aren't using license, because that can be a big cash leak in an organization. But also understanding the holistic, like, how are all of these systems and all these processes speaking to each other? Is someone doing work over here and then it's being recreated over here? Because again, like we said, everything ties back to the financials. So if people are wasting time or there's inefficient processes, we're going to see that flow through to higher costs or less output within the team. So understanding and doing that analysis, you may not be the expert of, different operational or IT systems, but definitely knowing what's being used, the cost associated, and creating some sort of understanding or workflow within the organization is important for the fractional CFO to do. Of course, understanding and leading what that is on the accounting and financial side as well.
Yeah, no, that's great insight and something that I don't know that a lot of business owners would consider part of the role of that fractional CFO. Rob, same question. What are your thoughts on this one?
Yeah, so I mean, at TGG, we're software agnostic. I mean, all the major softwares we have expertise in, and similar to Lauren, one of the first things we look at is a tech stack review. How are these softwares talking to each other? What's being used? How are they using it? And is there any automation efficiencies that can be gained through that? I mean, for us, we actually have invested a lot of time and money over the last year building our own proprietary data analytics and reporting platform so that we could have kind of a more holistic view of what's going on from a technical component. But at the end of the day, a fractional CFO shouldn't be coming in and changing it to the systems they like. They should be adapting their ways to what the client's using currently. And that's with all processes, really just reviewing it to the level that they should be.
Yeah. Yes, it sounds like some commonality there, that fractional CFO would come in, size up what technology is in use at some level of depth, and then get used to or work with whatever software is required of them, and potentially advise if they see areas of opportunity or waste along the way.
Correct.
Okay. Ashley, anything for you that you would feel is handled differently on the technology side? Is it expected that the fractional CFO learns what's in place?
Well, it depends. But I would say no matter what, the fractional CFO is going to evaluate what's in place, and make recommendations. And if there are integrations that can be put in place to have more real-time information to be able to pivot or take advantage of opportunities as timely as possible, I think we have an obligation to explore that.
Yeah. Good. Yeah. So providing advice on what could be in place or what might actually be able to integrate to make things smoother is something a fractional CFO would do.
Always be on our radar. Yes.
Good. Hey, Larry, and I'm going to ask you this question. What point is a full-time CFO a better option for a company than a fractional CFO?
I would say there are a few points where a full-time CFO makes more sense. In certain instances, companies that are in high growth mode can outgrow a fractional CFO, whether it's because it's a specific covenant in an agreement with a creditor, whether it's an investor that's in a board of directors and says, hey, I want a full-time CFO in my portfolio company just because it's better optics for whatever reason. And then also cost. So at the current sort of state, fractional CFOs make sense for small to medium-sized businesses because it's a win-win. It's cheaper for the business owner, and then it's also opportunistic for the fractional CFO firm to kind of help each other synergistically. But as a company grows and as more work is required from the CFO, then from an economic standpoint, it makes more sense to bite the bullet, hire a full-time CFO, and then just spread that resource as much as possible within the organization.
Yeah, those are good examples. I'm curious on some additional perspective here. Rob, same question. What are your thoughts on this one?
Yeah, I think a fractional CFO can be a great bridge. One of our internal metrics is if any one of our levels, whether that's a CFO, controller, accounting manager, or staff accountant, is spending more than 25 hours week over week with a client, that's usually kind of a break-even point where they should start to look at bringing that internally. And as that strategic partner, that's our job to be bringing that to the table to build out the most efficient and cost-effective accounting department possible. So I think the panelists nailed it there is like, what is that inflection point that makes sense? Yeah, bank covenants or board of directors demanding that, but also from a cost perspective and from, I think we talked about it earlier, a bandwidth. Like, is there enough work to be done at that level? And I think that goes back to clear delineation of duties. So we know a CFO should be working on more strategic items where a controller is more benchmarking, forecasting, KPIs. So are the duties really aligned at that level?
Yeah. I like that you even have a clear threshold, that 25-hour threshold that really puts it on the radar to say, is this still the right way to handle these particular activities, whether it be the fractional CFO or it sounds like some other roles that are covered as well. And then you feel that it's really the obligation of the fractional CFO of your organization to say, hey, we're hitting this point and it may be more advantageous for you to have somebody full-time than it is for you to have a fractional role.
Yeah, and I think that's one metric to be looking at. But again, also just from a functionality of the company. I mean, whether it's the personality we talked about from hiring a CFO or fractional CFO, or just kind of the day-to-day. If it's a single business owner that needs that strategic partner alongside them, and maybe that CFO, I mean, we say CFO, but it's not chief accounting officer, it's that C level, it's that leadership. So bringing in that strategic partner that can help you. And sometimes that CFO should be wearing multiple hats. And in certain organizations, that CFO should adapt to potentially being a COO in operations, because I think Lauren touched on it earlier, is everything in the organization somehow comes back to finance and accounting. So that role really plays a multitude of different hats.
Yeah. And that was definitely well said, like a fractional CFO or a CFO might say there at the end as well. With truth to it as well. Ashley, this next question for you, would it be wise to ask a fractional CFO to assist or even lead a process of ensuring that a controller or analyst has the basic competencies required to be effective at their job?
Well, why not? The owner needs to be focused on high value activities. And this is something that as fractional CFOs, we have expertise in. And it's there's other things that the leadership can be doing with their time. We're experts in it.
That's good, Lauren. So same question. What are your thoughts on this?
Yeah, absolutely. So the way that we hire within our organization for these roles and help our clients, I mean, we have an interview process, we have assessments to gauge what financial acumen looks like, and kind of can get a read based off of the culture and the environment of the company, as well as if they'd be a good fit. So I think it would definitely be a good thing for a CFO to lead, at least kind of vet through with help from the team, depending, if you have other, accounting managers or staff, have them be involved as well. But then bring maybe some final candidates to the CEO or business owner that have passed through they'll fit into this organization, and they have the financial stamina as well that's needed.
Yeah, so it sounds like a commonality in both answers, that it clearly makes sense for this fractional CFO to be involved in this process, and involved, if there are other team members, involve them in the process as well. Lauren, if there are existing team members in place, and a fractional CFO comes in, what level of responsibility do you feel a fractional CFO should play in assessing the existing skill sets and existing competencies of the team, and providing that information or that support to the owner or CEO?
Yeah, I think it depends on the complexity and the size of the organization, but it's really important that the CFO knows what those competencies are, because you can't just blindly rely on the financial information without having some sort of diligence done to know that these are, accurate, reliable numbers that we can use. We have strong controls in place. How we have preparers and reviewers and kind of that basic infrastructure. So doing that, I think that's going to come naturally as the fractional CFO dives into the business and gets a firm understanding. And that's definitely something that needs communicated to the business owner. I mean, the partnership between the fractional CFO and the business owner, and touching on what Ashley and others said earlier, that personality fit is so important. Because you need to be able to come in and build that trust, because in those two roles, you're going to have a lot of hard discussions and topics, about whether that's existing team members that have been there for 10 years that really aren't the great fit to help support the growth, because, things have not been done correctly, or they don't have the knowledge or the experience to do that. So I think that's a really important thing to be evaluated and discussed.
Yeah, and it sounds like, kind of thinking back to our earlier conversation, then it's a balancing act, and I would say it's really a leadership responsibility for the fractional CFO to say, here are the skill sets and competencies of the people on the team. Here are the people that I think we can develop, if they need to be developed more, mentor, or help them grow into what they need to do. And potentially, you would owe it to that owner, that CEO, to be able to say, here are some people that maybe are better suited in another role, but they maybe just aren't a fit for what you've had them doing at this point.
Exactly.
That's good. So I'm going to go ahead and ask this next question. This one here, as I kind of skim through it right now, I think this is actually a great question to go around with everybody on the panel. I am watching our time, so we're going to have this question, maybe a couple more. I think we're moving through the questions at a pretty good pace. But I'll be sensitive to everybody's time, both on the panel as well as anybody that's joined in with us today. So this question here, Lauren, why don't we stick with you just to kick it off? If you can give us an example of a recent problem that was solved for a client. I think this is great. So for everybody that's listening, that's trying to picture what it would be like to work with the fractional CFO, I think you're going to get, hopefully 4 different examples, maybe some similarities, who knows, right? But you're going to get 4 different examples, and just think to yourself, if you're kind of listening to this, are these the types of things that I would want support or help with within my business? But yeah, Lauren, if you could just go ahead and lead us into this one.
Yeah, for sure. So a recent example is we were working with a new client, and they had a service provider, and they had various different service offerings. And on their financial statements, everything was just booked to revenue. There was no revenue streams built out to understand. And so when we get in there and we're understanding the business and we're looking at margin, it's like, okay, margin feels a little bit lower for your industry than where we should be. Let's dive in and do a deeper analysis. And so breaking apart the different revenue streams and the different costs associated with each to see a general margin by service line, it was really enlightening to see that for one of the service lines in particular, the margin was at a loss. And the business owner had no idea because it was going really well. They kept getting new clients. The revenue numbers were looking great, but without matching and having that true visibility, it was actually causing them to lose money. And so we were able to say, okay, if we can't make this profitable, we need to cut this service line and just put more effort and time into the other ones that have stronger margins. And so that was one where working with the team and saying, okay, this is how you were coding everything before. This is the way that we need to break this out going forward, having that kind of mentor and guidance piece. And then also being able to shed this light to the business owner was just really eye-opening, because it felt like it was working really well until we broke it down and looked at the details.
Yeah, it's a great example. I can picture being that business owner where all of a sudden you realize that the service line you thought was performing best because you keep getting more business and it's running smoothly is actually the very thing that's driving down your profitability. But better to know than not know.
Exactly. It's the hard truths.
Yeah. Yeah. Illyrian, give us an example if you don't mind.
Yeah, I'm going to give two quick examples, if you don't mind, just because I think the two biggest value drivers for fractional CFO, at least from a financial planning and an analytics standpoint, is both on growth and operation. So each example will kind of speak to both of those things. On the operations side, we had a client that did about $12 million a year in revenue. They spent about 60 to 70% of their revenue on digital marketing ads to acquire customers, and their margins were extremely thin, about 5% in net income margin. The problem with that is because of all that leverage, if there's any fluctuations in sales, net income can easily dive into the negative territory. And so what we did was we did a cohort analysis, because the customer was previously calculating customer acquisition costs based on every customer making a purchase for the month in question. Whereas logically speaking, we should be attributing marketing spend to new customers that made purchases this month, not customers that had already been acquired and made a repeat purchase. So when we did that analysis, we found out, okay, your customer acquisition cost is actually a little bit higher and the margins are a little bit thinner with this customer cohort. Let's dive a little bit further and see how we can find ways to improve profitability. Well, based on this company's sort of website setup, the customer has the option to either buy 1, 3, or 6 sort of quantity of goods of what the business offers to its customers. And so we analyzed the profitability and the contribution margin for each customer cohort by the quantity of goods that they purchase. And what we found was the customers that were purchasing 1 quantity of good, when you factored in the customer acquisition cost, was actually a loss leader. So we made a simple recommendation to retool their menu to offer 2, 4, and 6 quantity of goods instead of 1, 3, and 6. And the client has since incorporated that recommendation, or is in the process of incorporating that recommendation. And last month alone, we saw their net income margin double. So they went from generating $50,000 in net income per month to $100,000 approximately in income per month. So that's a good operational example. And then real quickly on the growth side, in spirit of customer acquisition, we had a company that was sort of spraying and praying, investing across 5 different growth strategies. Their CAC had increased over time. And, much to what Lauren was saying, our customer was happy because revenue was going up, but we didn't know what was working and what wasn't. So we dove in, we segregated each one of those channels, figured out not only what the cost was attributed to each channel, but also the lifetime value of the customers coming in, meaning the quality of customers that come in across each channel. And we found out some were not as good as others. And we did what, my colleagues here have stated previously on today's panel. We reallocated resources. We turned off those growth channels. We started pouring more fuel to the fire into what was working, and profitability went up.
Yeah. It sounds like in your examples and also Lauren, what you shared, there are these hard truths where, as a business owner or as a business leadership team, we hopefully are passionate about the work that we do. Having someone from an outside perspective with the right skill set and knowledge, be able to break things apart, analyze it for us, and hopefully give us recommendations to say, hey, if you do this or do this differently, you're going to make more money, or you're going to put a lot less energy into things that you're losing money on. That's good. Ashley, same question. If you could just give us an example of a recent problem that you've solved for a client.
Yeah, this has been an interesting one. I've enjoyed it. We had a client come to us. They purchased 3 different entities. They were the same business model, operated nearly identical. However, they used different software systems. And the data, and this is a very data intensive business. But they were 3 different systems, 3 different presentations, and the client could not consolidate what he had purchased, what was really going on. So I went in, we married the data, pulled some really cool stuff, and we were able to measure the performance of each entity now apples to apples. And then, okay, so how are they performing? Where should we divest? Where should we focus? So that's been a cool project.
Yeah, that's good. So again, you have probably a technology component with that data component. So there's definitely a relationship there for a fractional CFO. And in that particular example, you were able to really simplify the information that was presented to that owner so that they could start making informed decisions based off your advice. That's
Exactly.
great. Rob, how about you? Any examples?
I don't know if this actually just happened last week. I don't know if it's solving the business owner's problem or our problem, in the sense that we look at accounting departments not as a cost center, but as a profit center. So one of the metrics we always try to hold our CFOs accountable is make sure you're paying for yourself every single year with different profitability tips. So, there's always low hanging fruit with the numbers. And a lot of the times our business owners just aren't looking at the metrics in the best way. So a simple one last week, we added a new client, looked at their DSO, daily sales outstanding, how quick they could bring in cash. We asked the business owner how quick they thought it. They're on net 30. They're like, I don't know, net 35, net 40. It was actually at 86 days that they were collecting cash. So we implemented a brand new collection process. From email, phone call, all that, got that down significantly, down into the 40s, which that money that was brought in went against their line of credit, their interest that they spent every year. So saved the client almost 80 grand on just implementing a brand new collection process. So not changing profitability in terms of how they're like doing actual business, but just better way of running the accounting department. So again, very low hanging fruit, but still very impactful for the business.
Yeah, very impactful. And I imagine as a business owner, to see something like that, be able to be put in place and take place is pretty powerful. So I'm going to start to close this out. So for everybody that's listening right now in the audience, I'm going to ask one last question of everybody on the panel. As I ask this question, I'm also going to be asking each panel member, just to close us out, let us know that how each person, if they wanted to get in touch with you or your organization, how they could do so. So I'm going to ask a question and then just close us out with how we can get in touch with you. Question I want to ask though is if you were to really try to sum it up, what value does a fractional CFO create for a business? And I know that's a really big, really broad question, but if you can try to simplify that answer as a business owner, what value do you create for their business? And then just let us know how we can get a hold of you after this as well. Rob, since you're on screen, why don't you go ahead and close us out, and I'm going to go around the whole panel.
Yeah, I mean, we have things called MIT and KPIs at TGG. MIT is the most important thing. And the most important thing for our CFOs is to drive revenue and profitability. So how you do that is by providing, insight, guidance, support, financial foresight, all those strategic level items at that CFO level. Because again, when you look at the CFO, it's got the C letter in front of the title. So being that strategic partner across a multitude of different areas within the organization. And if you're trying to get a hold of me, feel free to reach out to me on LinkedIn at Robert Rodriguez, or reach out on our website, tgg-accounting.com.
That's great. Thank you. Hey, before I jump to the next panel member, for anybody that's in the audience, just a quick heads up. I mentioned this earlier, but if you weren't in or if you didn't hear, I know there are questions that didn't get answered. Like I said earlier, all is not lost. What we're going to do is panel members have the opportunity, just the way that LinkedIn works for us, is to go in after this event. So sometime between, say, now and maybe Wednesday next week, expect that you'll see some of the panel members going in and doing their best to answer your questions right there in the comments there in LinkedIn, because chances are if you had that question, someone else probably has that question too. But don't be surprised if you've asked a question and all of a sudden you see every one of the panel members go in and give you some type of response because I know that they've shown up here today to try to provide as much value for you as possible, but they also recognize that we couldn't answer every question along the way. So if you have any more questions, even though we're closing out right now, please feel free to put them in the comments, and know that the panel members are going to go in after the fact as well. Ashley, if you could go ahead and answer that same question though, what value or what value does a fractional CFO create? And then let us know how we can get a hold of you.
I think flexing with the business, that's what a fractional CFO can do. We are not a sunk cost. So there is an appropriate fractional CFO approach to wherever you are in the business life cycle. And that is invaluable. I've seen it. And I can be reached at ashley.ferguson@nowcfo.com or Ashley Ferguson on LinkedIn.
Great, thanks for that. Yeah, and I like that flexing with the business approach that a fractional CFO can take. Illyrian, how about you? What value does the fractional CFO create for a business?
So the way we think about it at Profitability Partners is threefold, and it kind of aligns with our service offerings. So it's accounting, financial planning and analysis, and capital markets. On the accounting side, it's really just a time saver and providing additional insights for the business. Under FP&A, it's either growth or operations with the end goal of improving profitability. And then on the capital market side, whether a company needs money to finance growth or clean up their balance sheet or do an outright sale, having a CFO be in your corner for those, term sheet negotiations can add a ton of value from a transactional perspective. And then above all else, just having a sounding board. I think Lauren mentioned this earlier, having a different, unique perspective to be able to bounce ideas off of, because you can model out and stress test, strategies and hypotheses all day long. But really having that unique blend of perspectives, in my experience, has always led to the best outcomes.
Yeah, it's great. And how can everybody get a hold of you?
Yep, sorry, I was just about to say that. So you guys can get a hold of me via email at alir@profitabilitypartners.io or via LinkedIn at Alir Namedi.
Thanks for that. And Lauren, same question. If you want to go ahead and bring us home on this one.
All right. I think everyone's done a really good job of summing up the value, especially from the profitability, the revenue, the metric side. I think another aspect of that is the relationships that a fractional CFO can bring to the table. So with different vendors, bankers, people that we've worked with before, we can bring in those introductions. We're looking at the business from a different lens as the CEO. So it's a different, unique perspective. And what we've been talking about, the partnership, it's someone to really hold you accountable and have those tough conversations with. And I found that sometimes when it's not actually an employee, it is a fractional resource, it's easier to have those tough conversations of, we're going to have a layoff, or we're going to have to do something really tough that we're going to need to share within the organization, because there's a little bit of security that this person isn't going to be worried because it is not their full-time role. So I think there's different value aspects from the fractional piece there as well.
I appreciate that. And how can we get a hold of you?
You can find me at LinkedIn, Lauren Colson, or reach out on our site, colsonstrategies.com.
I appreciate that. And for anybody that's still listening right now, first from me, from Journey Alliance to each one of these panel members, I just want to say thank all of you. There was more time and energy invested than what everybody saw just on this panel from each of these panel members behind the scenes, as well as through the research process that Journey Alliance went ahead and did. Now, Jordan Roberts is the one on our team that handles all of our content management, and she's gone ahead and put together some research with these panel members contributing, but there was also a number of others that contributed to her research over the last couple of months. And so we have a report. Now, the report we're going to put in everybody's hands. The report actually will give you information about what it's like to work with the fractional CFO, although all of you that are here got to hear, frankly, a whole lot more substance than what's in the report. Not to do an injustice to the report, but because these panel members contributed so much today. Also in the report is we've gone ahead and just given away an example selection process that we would use, Journey Alliance would use whenever we're working with a client, that helps you kind of sort through who best to work with if you are to hire a fractional CFO or otherwise. Like some of the panel members mentioned, it's not necessarily just about technical expertise, it's just making sure you really have that right fit as well. So I'm going to go ahead and make sure that report gets sent out. And Other than that, thank you all for joining. If you want to reach out to us at Journey Alliance, you're welcome to do so. Eric Schultz, they're on LinkedIn with Journey Alliance. Mark Pizzulli is also on LinkedIn. Jordan Roberts is on LinkedIn. Chances are you're likely connected with one of us already. And journey-alliance.com is our website. But thank you all very much. And hopefully this added value. Have a great day.